What's up guys, it's your boy Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine as we have a very special video for you guys today. I hope y'all are feeling good and that your portfolio is looking juicy. Cause I'll be real, I'm feeling good and our portfolio is feeling even better. After the historic rally in the market, our portfolio has reached the $250,000 milestone. So what's the move? Should we pump the brakes and, I don't know, cleanse our portfolio, sell all of our shares, and put all the money into the Nasdaq or S&P? Which, for some squirts and smirks, let's do some quick math. And I'll apologize now as this is absolutely filthy and it's going to make some of you guys sick to your stomach. Anyways, if we were to sell all of our shares, which after taxes it really wouldn't be $250,000, but anyways, if we were to sell all of our shares and put $250,000 into the Nasdaq 100, or QQQ, which as always is your quick stock golden goose, and I didn't add a penny more to the investment. I'm in my 20s, let's pretend we didn't touch the investment until retirement, so let's just say 40 years. And regarding the interest rate, in the last 10 years, QQQ, or the Nasdaq 100, has had, on average, a 18.5% rate of return, which, let's be real, I'm not a psychic, it could well underperform or outperform the benchmark in the next 40 years. But for squirts and smirks, let's just assume an 18.5% annual rate of return. Ooh, like I said, filthy. You're reading that right, fam. That's nearly $250 million without adding a penny to our current investment. Obviously, this is a hypothetical on many levels, but I'm just trying to hype y'all up. Anyways, after getting completely off track, I will get back to your regularly scheduled quick stock content tomorrow. Today, after getting so many requests, it's time for me to do a portfolio reveal. So, I'm going to go over our long-term quick stock portfolio, which in all honesty I've been kind of torn about doing, as I make these videos for my own entertainment and your education, and honestly I'm not sure revealing my portfolio is going to meet either of those guidelines. As $250,000 is an absolutely bonkers amount of money to have in the market, and I don't want to deter anyone who sees this as an out-of-reach goal. Last thing before I get into it, I promise it's possible. Yes, I have been extremely blessed, but don't get it twisted. This took a decade of constant hard work, research, and luck. However, with the right guidance, I assure you it's possible. And if you're young enough and with the right guidance, I have no doubt you can become a multi-millionaire as well. So anyways, this is our current long-term portfolio as of June 6, 2020. We aren't talking options or companies that we've sold out of, which I'll probably make a video about in the future. But remember, our brokerage is E-Trade, who really doesn't make it easy to keep track of positions we've sold out of, or at least in an aesthetic, easy to manage manner. Seriously, E-Trade, you need to get on that. So, without further ado, I have to start with our foundation, the tried and true. It's not sexy, but it is our largest position. We've got just shy of $80,000 in VIG, which of course is the Vanguard Dividend Appreciation ETF, which, also shame on me, I'm not enrolled in the dividend reinvestment, so these numbers are actually slightly lower than my actual gains. But as of the last dividend payment, as of April, they paid me a smooth $300 cash, and with almost a 50% increase in share price, equating to a $25,000 appreciation. While we're at it, we've got over $30,000 in cash on the sidelines, which is gradually increasing due to dividend payments. And of course, you'll be the first to know when we find a banger of a company to invest in. Alright, moving on, we might as well cover some hype. Of course we have Tesla. Our boy, Papa Elon, has also come in clutch for us. And the last time I will note this, as I'm sure it would get repetitive, but these gains only represent our current position, and does not include profits we have already taken. As we've already talked about in previous videos, we've already taken $20,000 in Tesla profit over the last few years. Anyways, currently we have 45 shares worth nearly 40 grand, in which $20,000 is pure profit, baby, waiting to be taken, representing around a 250% profit. However, we aren't selling any more of our Tesla shares. I don't need to go into great detail because we already all know the company. Shameless plug, I don't want to go into great detail on my smaller positions as I do make a lot of entertainment plays equating to a few $100s here and there. But our next quick stock analysis will be on NDLS, which of course is Noodles & Company, which we made a $500 play into last week, which we've already made a smooth 40% on our position in 2 weeks. Not bad, fam. I guess while we're looking at it, I will quickly bust out a few of the smaller positions. A majority of these we've made a quick stock analysis on already, so if you're curious about a particular company you see here, just check for it on the channel. It's more than likely there. And note, this account is only 2 years old, so these are my more recent positions. First we've got ticker ZG or Zillow with a smooth 71% profit. We've got $5,000 in ticker V or Visa, a small position in Tesla that we talked about, 20 shares of Tencent, which we sold out a majority of our position, but check out the quick stock analysis. Tencent is a beast, fam. If US-China tensions were not escalating, I'd seriously be going all in on Tencent. $1,000 in ticker SQ or Square. I gotta give my boy Snapchat a shout out as they finally broke $20 a share, which we've already taken some decent gains from. Honestly, it's one of my bigger regrets though. I will probably end up having to buy back in for a higher value eventually. Low-key, I'm super bullish on Snap. But regardless, we still have a little less than a $2,000 position in Snap with a little less than an 80% gain. Another small triple Q position, ticker PYPL, which is PayPal, representing a smooth 72% profit. We've got big tech companies in multiple accounts, but at least in this account we have 3 shares of Google representing $4,300 and a few shares in our other account. This is embarrassing. We've got a 41% loss on FDX or FedEx. Honestly, I don't know what I was thinking, but that's a valuable lesson learned. $4,000 in Facebook, $400 in Edit. That's a spec play, but also I'm super bullish on it, which I haven't made a quick stock analysis on yet, but in due time I certainly will. Ticker DIS or Disney with $4,700 on this account, and I think $5,000 on the other account. Ticker BYND, which of course is Beyond Meat, which we bought into yesterday after making our quick stock analysis. $2,400 in BOTS ETF, 4 shares of BABA on this account, and 14 shares on our other account, in total worth around $4,000. Ticker AMZN, of course Amazon, worth $7,500. Now that we've covered some hype, I haven't talked about this company in any of my videos, as I'm sure I'll get some hate, as we're all about the hype here at Quick Stocks. However, we actually have a $12,000 position in PG, which of course is Procter & Gamble. I know it's not hype, but y'all can hate on a 2.5% dividend payment and almost a 100% in total gains, representing nearly $6,000 in profit waiting to be taken. I'm not necessarily recommending P&G to the average growth investor, but as our account is a decent size, it's more of a hedge that rewards us with a decent dividend payment. Next we have ticker NJDCY, which I could see us selling the rest of our position relatively soon. It's not an extremely well-known company here on YouTube. They are a Japanese manufacturer of electric motors, products that are found in hard disk drives, electric appliances, automobiles, and manufacturing equipment, which has done us well with a 262% gain representing $4,600 in profit. We've also got $6,300 in Microsoft, which we picked up last month. We've got $4,500 in ticker LLY, which is a pharmaceutical company, which was one of our first positions, which has made us a smooth 325% profit, representing $3,400 in profit. We've got $5,000 in ticker VFWAX, which is another Vanguard fund that gives us some world exposure. Like I said, another $5,000 in Disney, which I have a target price of around $175. $2,300 in HXL, $3,000 in JNJ. For the most part, this covers our long-term portfolio as of June 6th, 2020. Like I said, we have a handful of small positions here and there that I don't really want to cover yet, as I plan on making a quick stock analysis on them, in which I'll decide if I should increase my position or not. I hope that this can give you guys some more clarity behind my decision making when evaluating a company. Clearly I am taking some risk. However, as my account grows, I don't need to take such large risks. As if I can make a conservative 10% annual rate of return on my portfolio, that's still $25,000 a year. before taxes. Anyways, guys, that's all we've got for today. As always, the best investment you can make is to go long on quick stocks. Hit that subscribe button now at 345 subscribers and plan an early retirement. I'll catch you guys in the next one.